So, good evening. Today I'm going to explain about the salaries and wages, including the EPF and ETF, Employees Trust Fund and Employees Provident Fund. Okay, another very important session. So let me start with the concept of Employee Provident Fund and Employee Trust Fund. This is the employee. Here is the company. Right. Okay, so let's start. I hope you all can hear. If you all can't hear, if there's any issues, please let me know. Right? So when we work in a company, when you are an employee, right? When you are an employee, you will be getting a salary. Okay, so the company has to pay a salary to the employee. Right? So this salary has a basic salary. The salary has a basic plus the company will give the employee different allowances. Company will give different allowances to the employees. Okay, so the allowances are the different types of allowances. Right, so company will give medical allowance, traveling allowance, food allowance, accommodation, then overtime. These are other additions. Other than the allowance, company can give overtime payments. Bonus, right? So these are other additions. And let me put it as additions. additions to the salary, right? I can take all this for medical, food, traveling, accommodation. Those are allowances, right? So other than that, overtime, bonus payment, right? So the total of this, the basic plus additions, we call it the gross salary. Gross salary. Basic plus additions are called gross salary. Okay. Then the company, the employee must pay. Or from the gross salary, there are deductions. You won't get the gross salary to your hand. Now let's say you are working in a company, right? You won't get your gross salary. From your salary, there will be deductions. Company will deduct some amounts from your salary. Right? One of the main deduction is the EPF, Employee Provident Fund. So when it comes to EPF, Employee Provident Fund, the employee or the employee, right? Employee must pay or contribute 8% to the EPF, and the employer means the company. Employer should contribute 12% to the EPF fund, right? So sometimes the company may contribute 15% and the employee contribute 10%. So there are two options available for the EPF contribution: 8%, 12%, or 10%, 15%. Right? So 8%, 12% means total amount in the EPF fund will be 20%. So what is this EPF? EPF is a social, we call it, it's a social security system. One of the social security system. S. So what is social security? Social security means, now if we are working in a government organization, end of the career, right, or after the retirement, you will get what? Pension. Right? If for a government employee, he will get a pension. Right? But anyone who is working in a private organization, if he is retiring, he need to get a bulk sum of money, right? Because after that he can't work. So to secure the private organization, private employees of the private organization, government has implemented the EPF fund, Employees Provident Fund, right? So they will get EPF. This is a social security system for a private company, private organization, EPF and ETF. Right? So what happens is, from the salary, from your total salary, every month you contribute, from the salary you will contribute 8%, and the company will contribute 12%. So let's say your gross salary is 100,000. If the salary is 100,000, right? So from the salary, you contribute 8,000 to the EPF every month. And from the company, company will contribute 12,000. So total 20,000 will be available in the EPF fund. So every month 20,000 each will be contributed. So it's like a saving from the salary. It's like a saving. Every month you are saving 20,000, right? So once you pay, let's say only EPF is there, you will get only 98,000 to your hand. So 92,000. 92,000 is your net salary. Net. That's the amount you will receive. Okay. So you contribute 8%, company contribute 12%. Total in the EPF fund is 20,000. So let's say you are working for 10 years. You are working for 10 years, 10 years into 12. The total amount in the EPF fund, the contributions will be 20,000 into 12 is 240,000, which is annual contribution. And if you work 10 years, 2.4 million will be available in the EPF fund. And they will add the EPF, the government or the central bank, EPF is in central bank, right? So they will add interest to this. So you will get your contribution plus interest. Then we have ETF, Employee Trust Fund. Right? So the Employee Trust Fund is also for a private sector organization, and only the company will contribute 3%. Company will contribute 3%. Employee doesn't contribute for ETF. Employees doesn't contribute for ETF. Okay. So both are contributions, right? Employer contribute only for, employee, right? Employee contributes only for the EPF, 8%. Employer will contribute both EPF and ETF. 12% EPF, 3% ETF. Okay. Then let me go through the EPF, ETF sites and have an understanding about EPF. This is the Employee Provident Fund. Right. So Employee Provident Fund, if you go through this description, just have a idea about the EPF fund. The Employee Provident Fund was established under the Act number 15 of 1958. It is currently the largest social security scheme in Sri Lanka. Social security scheme, largest social security scheme. So I explain what is meant by social security scheme. see the asset base. So the asset base is 2,540 billion. It's not a small amount, it's a huge amount. 2005, it's not 2 billion, it's 2,540 billion, right? So the EPF is a little peace of mind for employees of institutions and establishments of the private sector, state-sponsored corporations, statutory boards, and private businesses. The aim of the EPF is to assure financial stability to the employee in the winter of life, end of the or the retirement, after the retirement, to reward the employee for his or her role in the economic growth of the country. That's the main objective. Right. So this is administered by the central bank, EPF Department of Central Bank. Right. So according to the Act, minimum, right? Minimum is 8%. Employee is required to contribute minimum of 8%, and the employer a minimum of 12% of the total salary of the employees monthly salary of the employee. Okay. So it's a huge amount which is in the EPF fund. Right? You might have heard about the bond scam, the very famous topic, which is from the EPF fund, like central bank bond scam. The very famous topic in Sri Lanka. So this is something which is related to the employee provident fund. Okay. Then if you see the ETF, employee trust fund, so here is the description on employees trust fund. It was established on 1st of March 1981. This is administered by the Employee Trust Fund Board. Right, so this is under the Prime Minister. Okay, so 3% should be contributed by the employer, by the company. At present, active membership 2.6 million and covered 79,000 employees, and it has 339 billion as the fund. So this is Employee Trust Fund, Employee Trust Fund, ETF. This is ETF, Employee Trust Fund. Right, 3% should be contributed. This is also a social security system where companies must contribute 3%. So it's easy. It's like a saving every month from your salary. You save 20% plus 3% will be added to a fund. So later, once you retire, you will get this amount with the interest. Okay, you all can go through these sites further verification. So here now we are mainly focusing on the accounting treatment for EPF, ETF, and the salaries. And we also have a another item which is pay tax. There's a doubt. Can you please explain once more? Yeah. Let me explain through this. This is the employee. This is the company. When the company is paying a salary to the employee, company has to pay 12% in addition to the salary. Company has to pay 12% to the EPF fund. Right? So employee has to contribute 8% to the EPF fund every month. So total 20% will be saved into the EPF fund. And ETF is also another separate fund. Only the company will contribute or the employer will contribute 3%. That is 3,000 in this example if the salary is 100,000. So every month 23,000 will be saved to your EPF and ETF funds so that you can get it. That fund can be collected after the retirement. Right? So it is called a social security system to safeguard the employees after the retirement. Okay. Then also we have pay tax. So this is a tax on your salary. There is a tax table for this. So for your salary, you have to pay a tax for the inland revenue tax department. Right. So according to the act, this is the current taxes. If the monthly income, monthly salary is 100,000 up to 100,000, no pay tax, no tax. If the salary is 100,000 to 150,000, 4% of monthly regular monthly salary, 4%. That means you have to pay 4,000. If the salary is 150 to 200, 10,000, 8%. 200 to 250, 12%. You don't need to remember all these percentages or anything, right? In the question, they will provide you the amounts. So I'm just briefing you what is there in the EPF, ETF, and the pay tax. Okay. Right. Now we'll move on to our explanation. Okay. Now let's do one example question. So this is the example. Right. Read this example. Basic salary. So this is a company's salary details. There are 3 employees, Amal, Bimal, and Chamal. 3 employees. So their basic salary is given. Basic salary 100,000, 200,000, and 300,000. And the overtime, they have worked overtime 120 hours, yeah, 40 hours and 80 hours. So these are the extra hours that they have worked. Extra hours they have worked is 120, 40 and 80. That is to calculate the overtime. Then the traveling allowance given 20% on the basic salary. Overtime is paid 1.5 times than the normal hourly rate. Normal hours, 8 hours, 5 days, 4 weeks. That is per month. Per month, an employee should work 8 hours per day, 5 days per week, and 4 weeks per month. So if you multiply this, an employee must work normal hours. He should work 8 hours into 5. 8 into 5, 40 hours per week into 4 weeks means 160 hours. Normally, an employee must work 160 hours. 160 hours. Employer EPF 12%, ETF 3%, employee EPF 8%. EPF and ETF not considered for overtime. So for the overtime, we don't consider EPF and ETF. Only for basic salary plus the any other additions, we have to calculate EPF and ETF. Pay tax, Amal 5,000, Bimal 10,000, Chamal 15,000. 5% on the basic salary will be contributed for the welfare fund. So the company is having a welfare fund. For that fund, they have to contribute 5%. Loan recovery, A 5,400, B 10,800, C 21,200. So first requirement, the salary sheet. So this is the format of the salary sheet. So let me do the salary sheet first. Right. Draw this salary sheet. Salary sheet for the month of January 2020. Employee number, employee name, the basic salary, and additions. There are two additions. One is traveling, other one is overtime. And for the basic salary, if we add the additions, we get the gross salary. And from the gross salary, there are deductions, EPF 8% from the employee. They have to pay a pay tax and they have to contribute for the welfare fund. And there is a deduction for the loan. Then if you deduct the deductions from the salary, gross salary, we have to pay net salary to the employee. And after that, from the employer's contribution, other than the salary, other than the gross salary, the employer should contribute 12% to the EPF and 3% to the ETF. So you need to draw this table. So can you draw this table? After that, we'll uh, complete the table. ABC traders salary sheet. This is called a salary sheet. So now let's complete this table. So initially, you can write the employee name. Amal, Bimal, and Tamal. So let's employee number. Employee number 1, 2, 3. Amal, Tamal. You can complete it. You don't need to wait until I do. Let's complete. Basic salary is 100,000, 200,000, 300,000. 200 and 300,000. Then the traveling allowance is 20% on the basic salary. Traveling allowance is 20% on the basic salary. Let's do one by one. Traveling allowance 20% of the basic salary. So from the basic salary, you multiply 20%, 20,000, 40,000, and 60,000. 20,000, 40,000, and 60,000. Now the overtime calculation. Overtime. Can you calculate and tell me how much is the overtime for A, B, and C? Tell me just A, Amal, how much is the overtime pay? Overtime, he has worked 120 hours. So normal hour is 160. Overtime is paid 1.5 times than the normal hourly rate. So you need to find out what is the normal hourly rate. Normal hourly rate for each employee. Then that should be multiplied by overtime hours. Can you give a try and find out the overtime for Amal, Bimal, and Chamal? First, find out for Amal. So here, let me calculate the overtime. Calculation of overtime. So let's calculate the overtime. Tell me how much is the overtime. So I'm going to calculate for Amal, Bimal, Chamal. First, let's calculate the hourly rate. How do you calculate the hourly rate? That is basic salary divided by normal hours. Basic salary divided by normal hours will be the hourly rate. How much they pay for 1 hour. Amal's basic salary is 100,000. Bimal is 200,000. Chamal 300,000. They work, the normal hour is 160. 160, 160. Then you get the hourly rate. So, hourly rate. Hourly rate is normal salary. The salary divided by normal hours. So if you take Amal's hourly rate is 629. Bimal's hourly rate is 1,250. Chamal's hourly rate is 1,875. That's the hourly rate. Then that should be multiplied by overtime. No, not that. We have to calculate overtime hourly rate. Overtime rate. Overtime rate is 1.5 times than the hourly rate. 1.5 times than the hourly rate. So we multiply the hourly rate by 1.5 times. So it's 937.5, 1875, 2812.5. That's the overtime rate. In the overtime hours are given, overtime hours. Amal has had worked 120 hours, Bimal 40 hours, Kamal 80 hours. Then you can find out the overtime payment. Overtime payment is overtime hours into overtime rate. Overtime hours into overtime rate. 112, 500, 75, and 225,000. This is the overtime rate. 112, 500, 75,000, 225,000. Any doubts? Is it clear? Calculation of overtime. Overtime rate is calculated. Overtime rate is calculated. Hourly rate into 1.5. Is into 1.5. Multiply by 1.5. Any other doubts? Right. So calculate the gross salary. Gross salary is the addition of basic plus traveling plus overtime. So add all these amounts. Gross salary. Gross salary. So you can write this and calculate the total gross salary. Right, so then we'll calculate the EPF 8%. So here they have mentioned EPF and ETF not considered for overtime. So we can't consider the overtime. We have to consider the basic plus the traveling. Only for basic plus traveling, we have to calculate the EPF 8%. So 120,000 is the basic plus traveling for Amal into 8% EPF contribution. And it's 960, 9,600, sorry. And 240,000 Bimal into 8% is 19,200. Chamal 360,000 into 8% is 28,800. Right, so we also get the total values. That's EPF. EPF employee contribution. In the pay tax, it's directly given 5,000, 8,000 and 15,000. Total 30,000. Welfare fund is also given 5,400, 10,800, 15,000. Total 31,200. So, sir, that is not welfare fund. That's the loan. Welfare fund is 5% on the basic salary. So 100,000 into 5%. 200,000 into 5%, 300,000 into 5%. So total 30,000. That's welfare fund. Loan is 5,400, 10,800, 21,300. So that's loan. So these are the deductions. So can you calculate the net salary? Net salary means gross salary minus the deductions. From the gross salary, if you deduct EPF, pay tax, welfare, and the loan, you will get the net salary. So let's calculate the net amount, net salary. Gross salary minus addition of all the deductions. So A is getting 207,500, B Vimal 265, Chamal 300 and so 505,000. The total is 977,500. Then the EPF and ETF contribution by the employer. Employer means the company. It is also paid for basic plus traveling. Basic plus traveling into 12% for the employer and 3% for employer ETF. 3%. 12% and 3%. It's a must to calculate the total because now this is the first step. The next step, we are going to transfer this to the ledger account. So for the ledger account, we transfer the total amounts. For the ledger account, we transfer the total amount. So it's a must to calculate the total. EPF is calculated, EPF and ETF is calculated for basic plus traveling. These two. Not for the overtime. Any other questions? So it's a must to calculate the total. Right. Is there any other question related to this table? Write down all the workings if possible. Let me know if you all have any other doubts. The EPF 12% and 3% is calculated from the employee salary. From the salary only we calculate EPF and ETF. From this salary plus basic plus traveling. From this 8% is employee contribution, 12% is employer contribution. Net salary is calculated from gross, from this minus all the deductions. From the gross salary, deduct all this, so you will get the net salary. Net salary. Any other questions? Right, so let's move to the next part. So the next part, number 2, the question. We did the first part, which is salary sheet. Then number 2, journal entries. Number 3, ledger accounts. And so let me explain the journal entries. Right. So when it comes to the journal entries, double entries, we have to record 4 entries. Remember, there are 4 double entries. One is the gross salary. This is the company's salary expense. This is the company's salary expense. So this should be debited to the salary expense account and credited to the salary control account. So we will prepare a salary control account for the salary adjustment. It's a payable account. So gross salary double entry is salary expense account debit, salary control account credit. I'll give the double entries. I will write the double entries. First, I'll explain the 4 steps. Then the second step is all these deductions. Now, we have to pay 1,132,500 for the employees' salary. But we don't pay the full amount, there are deductions. So from the salary control account, we have to deduct all these amounts. And we have to credit that to the relevant account. EPF will be credited to EPF payable account. So company must pay this to the EPF fund. Pay tax also, it's a payable account for the company. Welfare is a fund account. Loan is a recovery account. Then the third entry will be EPF employer contribution. So this is an additional expense for the employer. Additional expense for the employer. So expense account debit and EPF payable account credit. And this is also another additional expense for the employer. ETF expense account debit, ETF payable account credit. I'll give the journal entries. So here is the double entries for these 4 steps. So I want you all to write down these 4 double entries. Journal entries. Number 1, gross salary. Salary expense account debit. Salary control account credit. Then the deductions from the salary. Control account debit. Relevant deduction account credit. Employer EPF contribution. Employer ETF contribution. So can you all write this double entries? 4 steps, 4 entries. Okay, now the third step, we'll do the third step. Third step is double entries. Now we need a salary control account, salary expense account, salary control account, salary expense account, and the deduction accounts for EPF, pay tax, welfare, loan, and the expense accounts, EPF, ETF. Okay, so draw these ledger accounts. Salary control account, salary expense account, then pay tax, payable account, EPF payable account, ETF payable account, welfare fund account, and employee loan account. So can you draw these accounts? So these are the ledger accounts that we need. Draw these ledger accounts. So if you do this question, you can answer any question related to salaries and wages. Draw these ledger accounts. Then record the transactions. Number one, gross salary. Gross salary is 1,132,500. This number. Double entry will be salary expense account debit. This is number one. Salary control account. Credit. 1,132,000. Salary expense. This is number one. First double entry. There is a doubt. What is salary control account? Salary control account means it's a temporary account where we record the salaries payable to the employee. It's a payable, a liability. Expense account debit, payable account credit. Then we have to deduct all the deductions, and the net salary will be paid to the employee. It's a temporary account to show the salary related transactions with the employee. Let's draw these ledger accounts and record transaction. Number one is expense account debit, salary expense account debit, salary control account credit. Then number two, all the deductions. So let me take it into green color. We have 4 deductions. So double entry for the deduction is control account. Now this is the total amount payable to the employee. 1,132,500. But we don't pay this amount. There are deductions. So all the deductions should be debited to the salary control account and credited to the relevant deduction account. So what are the deductions? EPF, pay tax, welfare, and loan. So these are deductions. Number 2. This is EPF payable. EPF will be transferred to EPF payable account. Pay tax also we transfer to payable account. Second adjustment I'm doing. So I put the number. Welfare fund. Loan recovery. All the deductions, debit the salary control account, credit the relevant deduction account. Payable, welfare fund, employee loan. There is a doubt, what is welfare fund? Now, when we work in a company, companies have an HR department and also they maintain a welfare fund. So let's say in a company, if something happened to the employee, let's say a death, one of the employees' mother or father is passed away. Right? So the company must contribute something for this incident. Right? So what they will do is, most of the companies, they will have a welfare fund in the company. Every month, all the employees contribute a small amount to the welfare fund. So if something happened to one or few employees, from the welfare fund, they will do the payment. It's a fund, special fund for the welfare of the employees. EPF payable is 57,600. Welfare fund 30,000. Employee loan. Loan is, now companies can give loan to the employee. Company may give a loan to the employee, right? And the loan given to the employee is an asset. There can be an opening balance. You don't know the balance. Then from the salary, they will recover the loan. So salary payable account debit and the loan account will be credit. So all this from the salary control account. Deductions. Deductions from the salary. What is pay tax? Pay tax means pay as you earn. Pay as you earn tax. So it's a tax on your salary, your income. So company will deduct this from your salary and they have to pay this to the relevant department. Then the third entry, third journal entry, EPF 12%. EPF 12%. 86,400. So that is an additional expense for the employer. EPF expense account debit, EPF payable account credit. It's an additional expense. Other than the salary, they have to pay the EPF payable. 86,400. And third adjustment, EPF expense 86,400. In the final double entry, ETF 21,600. Double entry is expense, ETF expense account debit, ETF payable account debit. So 21,600. So that's how we do the corrections. Double entries for this transaction. right? Then the next step, the final step, or the final requirement is draft financial statements. Draft financial statement. Now, in the salary control account, if you take the balance, this is the final balance. Either this could be paid, this can be cash, or carried down to the next year as the payable, next month as the payable. Now, from this, if you deduct all the deduction, 977,500 is the net salary payable. It's the net salary payable. Okay. Now let's show the income statement and statement of financial position. So these are the expenses: salary expense, EPF expense, ETF expense. These are the expenses of the company which goes to the income statement. We have to show these three. We have to show these three in the income statement as administration expense. Under administration expense, there will be a salary expense 1,132,500, EPF expense 86,400, ETF expense 21,600. And these are payables. We have to show these payables under in the balance sheet under current liability. Pay tax payable is 30,000. EPF payable, the total, you have to take the total balance carried down. It's 144,000. You have to take the total 144,000. And ETF payable is 21,600. So especially you have to show this and final salary payable if it is not paid. Right? So let's draw the format for income statement and SOFP. Let me take the income statement and statement of financial position. Right. So what comes under income statement? Income statement, we record the expenses. So here you can see there are three expenses: salary expense, EPF expense, ETF expense. So these three will come under income statement, under administration expense. And payables, EPF, ETF, and the pay tax payable, including the salary payable 977,500, comes under statement of financial position. So administration expense, salary expense, EPF expense, ETF expense, salary 1,132,500, EPF 86,400, ETF 21,600, and the payable EPF, it's total 144,000 total. EPF 21,600, pay tax 30,000, and finally the salary payable 977,000. So these are the things you show in the draft financial statements: income statement and the statement of financial position. Any doubts? This is a very important question because this covers everything in the salaries and wages. We have the salary sheet, right? Then the journal entries, ledger accounts, and the draft financial statement. So all the questions will be based on these things. Sometimes in the exam, in MCQs, they might ask you what is the total expense of the employer. You have to take these three. Sometimes they might ask what is the EPF, total EPF payable. So you have to take employee contribution and employer contribution. So likewise, questions can be given separately. So then there's a doubt. Welfare and loan, I'm not taking welfare and loan into the statement of financial position because welfare fund comes under separate fund account, but we don't know the opening balance or anything, right? So this is only one transaction is there. And employee loan also, it is a current asset. It can be non-current or current. Normally it's a current asset. We don't know the balance. So that's why I don't take it. Normally these amounts only you need to know. Any other doubts? Ask me any question related to this. Welfare fund is a liability account, a fund account. Normally, we keep it as a non-current liability. Then what I will do is, now since the entire question I explained, I want you all to do another question I'll give as a homework. You all can do it right now. Okay. So we'll do another example and do it and send me. After that, in the next session, I will explain the uh, A-level past papers because you need to understand this entire process. Then only it's easy for you to answer any question related to this salaries and wages. Right? I will give you all another question. Try to do it now itself. Okay. So let me change few amounts in this example. I'll share this in the group. Basic salary, it's a 4 employees. Employee 4. 200,000, 300,000, 400,000, 500,000. A similar question. I'll give a similar question. Traveling. medical allowance 10% on basic salary. Medical allowance 10% on basic salary. Overtime paid 2 times than the normal hourly rate. The normal hourly rate is this. EPF, ETF, pay tax. Pay tax. Let me give you pay tax. %10 from the basic salary. 2% on the basic salary will be contributed for welfare fund, loan recovery, A Ajit 25,000, Sunil 30,000, Nimal 40,000, Ravi 50,000. Okay, so you have to prepare the salary sheet, journal entries, ledger accounts, and the draft financial statements. So I'll share this in the WhatsApp group. Do it now itself and try to send me the answers so I can correct any, if there is any mistakes, I can do the corrections. Okay, do it now before you forget things. Example. Okay. So once you complete this, I can, on the next session, I will explain A-level past papers. Okay. Any other doubts? So we'll conclude the session today and previous question. So this is the previous question. I'll share this in the group. Answer for the first one. Okay. Any other question? Right. So if there is any doubts, drop me a WhatsApp message. I will try to reply. Okay. So we'll conclude from this point. I'll see you on Thursday in our paper class, and we'll continue the salaries and wages past papers and another new chapter on Friday. Okay. So good night and take care. See you on Thursday.